Hi, everyone. This is Global Podcast, your window to the world. Breaking news, big ideas, your global hangout for what's happening now, and bold conversations. Wherever you are, we're bringing it to you. Let's get started.
All right, so you're here with us on the deep dive because you want to really understand what's going on in the business world, and you want to know it right now.
That's right.
So today, we're going to be looking at a couple of big things.
Yeah.
First, we've got some interesting activity in the Indian markets as they went into a holiday.
Right.
And then everybody's talking about the potential global impact of these new Trump tariffs.
Huge.
Yeah. So we've been looking through all the headlines and reports, and we're going to try to break it all down for you without getting lost in the weeds.
Yeah. You want just the insights from this huge amount of information, and that's what we're here to do.
Exactly.
We're going to start by looking at the Indian market's performance.
Okay.
All the different factors at play there.
Right.
And then we'll shift our focus to the far-reaching consequences of these tariffs.
Okay.
Because it's a connected world.
Yeah.
Understanding those connections, that's what gives you the real picture.
Okay, so let's jump right into this Indian market snapshot.
Yeah.
It seems like there was some positive momentum building before they went on holiday for Eid al-Fitr.
Yes, the Indian stock exchanges, the BSE and NSE, they were closed today, March 31st, for the Eid al-Fitr holiday.
Okay.
Trading is scheduled to resume on April 1st.
Got it.
Now, looking back at March, the Nifty actually had a very strong month, a 6% gain.
Wow.
Which is really interesting.
Yeah.
And this surge was largely driven by banking and financial stocks. And this kind of growth in that sector, it often reflects things like positive regulatory changes,
Okay.
increased loan activity, and just overall investor confidence in the economy.
Yeah, so a solid 6% jump fueled by banking and financials.
Right.
That definitely says something about how people are feeling about the market.
It does.
But I did notice that there was a small dip right before the holiday.
Yeah.
What caused that?
Yeah. So on March 28th, the Nifty did experience a small downturn, about 0.31%.
Okay.
And it's not uncommon to see a bit of profit taking, as traders square up positions heading into a break, or maybe some investors were exercising a little caution.
Yeah.
Given the, kind of global economic landscape.
Right.
But it's a good reminder that even in a positive trend, you can still have these short-term fluctuations.
Absolutely.
Things go up and down.
They do? They do?
Even in a good market.
So it wasn't just the stock market that was looking up. The Indian rupee also had a pretty remarkable month.
Absolutely.
Didn't it?
The Indian rupee saw significant appreciation. It actually had its best month in 7 years.
Wow.
Strengthening by 2.4% against the dollar and closing at 85.47 per dollar.
Mm-hmm.
And a key driver behind that strength seems to have been foreign investment.
Okay.
Nearly $4 billion flowed into Indian assets just in the last 10 days of the fiscal year.
Wow.
That's a huge vote of confidence.
Yeah, that kind of inflow of money will definitely boost a currency.
Absolutely.
Now, when the markets reopen, there are some specific company-level events to keep an eye on.
Right.
You mentioned these corporate actions.
Yes.
Dividends and bonus issues. Can you explain what we mean by corporate actions for those who might be new to this?
Sure. So in this context, we're talking about decisions made by a company's board of directors that can affect shareholders.
Okay.
So interim dividends, that's basically a portion of the company's profits that are given to shareholders before the end of the fiscal year.
Okay.
Bonus issues, on the other hand, that's when a company gives existing shareholders additional shares for free based on the number of shares that they already own.
Right.
Now, the important date to watch is the X date.
Okay.
If you want to be eligible for the dividend or the bonus, you generally need to own the shares before this date.
Makes sense.
So for ADC India Communications and Capital Trade Links, they both have X dates for interim dividends and bonus issues on April 2nd.
So that's something to look out for. But the big development that could really overshadow everything, not just in India but globally, is the announcement of these new Trump tariffs.
Yes. This is where things get really interesting.
Yeah.
And potentially create some headwinds.
Right.
The announcement of these tariffs on March 31st, it's already sent shockwaves through global markets.
And the reaction seems to have been pretty negative so far.
Yeah, global stock markets have reacted really quickly. For example, the Nikkei index in Japan dropped almost 4%.
Wow.
Other Asian markets, they followed a similar trend.
Yeah.
And even futures contracts for major U.S. indices, like the S&P 500 and NASDAQ, saw declines of over 0.5%.
Okay.
And that indicates some serious unease among investors.
Almost 4% on the Nikkei. That's a huge move.
It is.
Really shows how interconnected these markets are.
Yeah.
It's not just a regional concern.
Right.
This is impacting investors everywhere.
Absolutely.
So what are the main concerns here?
Yeah, what are investors so worried about?
Right.
Well, it really comes down to the potential for a trade war and what that could mean for global economic stability. The economists are already worried about the increased risks of a recession in the U.S.
Right.
Goldman Sachs, for example, estimated a 35% probability of a U.S. recession. Now, that's not just a random number. They base that on their analysis of how these tariffs are likely to fuel inflation and dampen economic growth.
Yeah.
Because think about it. Tariffs increase the cost of imported goods, which can lead to higher prices for consumers and businesses.
Of course.
So that can reduce consumer spending and make it more expensive for businesses to operate, ultimately slowing down economic activity.
A 35% probability of a recession. That's definitely something to worry about.
Yeah, it's concerning.
Seems like a big part of that is this potential jump in inflation.
Exactly.
Right.
Projections suggest that these tariffs could push inflation rates up significantly. Maybe even reaching 3.5% by the end of 2025.
Wow.
And that's well above the Federal Reserve's target. If inflation rises that much, it could force the Fed to raise interest rates, which can make borrowing more expensive and further slow down economic growth.
So it's a whole chain reaction.
Right, a domino effect.
Yeah. Investors are bracing themselves for higher prices and a slower economy.
Yeah.
That's not a good combination.
Not at all.
So it's no surprise that they're looking for safer places to put their money.
Exactly.
Right.
We're seeing reports of increased demand for things like government bonds and gold.
Right.
Investors are looking for safety in uncertain times.
That makes sense. A classic flight to safety.
Right.
Let's talk about the tariffs themselves.
Okay.
They could potentially cover almost all imports.
Yeah. It's a very broad proposal.
That's a huge scope.
It is. President Trump has indicated a very wide-ranging approach, suggesting that the tariffs could apply to almost all goods coming into the country.
Wow.
And he's emphasizing these reciprocal tariffs,
right,
which means specifically targeting countries that already impose duties on goods coming from the U.S. And this really increases the likelihood of retaliation from other nations,
right,
which could lead to a full-blown trade war.
And we're already seeing that the EU and Canada are preparing to respond.
Yeah, retaliation seems almost inevitable.
Yeah. What industries are most likely to be targeted for retaliation?
Well, the EU and Canada are major trading partners.
Right.
And they've already said they're going to respond.
Yeah.
We could see them targeting key U.S. exports.
Okay.
Like agriculture, certain manufactured goods, and maybe even technology products. They'll probably choose targets that will put pressure on the U.S. economy.
So we know how broad these tariffs could be.
Right.
But what about the actual rates?
Yeah.
What kind of increases are we looking at?
Well, the specific rates will be announced on April 2nd.
Okay.
But the general expectation is an average increase of around 15% across different categories of goods.
A 15% average increase.
Yeah.
That's going to add a significant cost.
It is.
And that cost is probably going to be passed along to consumers.
Right.
Are there any sectors that are going to be hit harder than others?
Well, the automotive sector is particularly vulnerable because the U.S. imports a huge amount of auto parts, about $197 billion worth last year.
Wow.
So if the cost of imported steel or semiconductors goes up by 15% because of tariffs, car manufacturers have to decide, do they absorb that cost, which hurts their profits, or do they pass it on to consumers with higher prices for new vehicles? And those higher prices can then reduce demand, which leads to slower sales, and that impacts economic growth.
It's a ripple effect.
It could disrupt the entire auto supply chain.
From the factories to the dealerships.
Exactly.
So given all of this uncertainty, what's the mood among investors right now?
Well, the overwhelming feeling is caution and uncertainty.
Yeah.
A lot of investors are taking a wait-and-see approach.
Makes sense.
There's still so many unknowns about the details of the tariffs, how other countries are going to respond. Yeah.
And what the ultimate economic consequences will be until there's more clarity. Many investors are likely to stay on the sidelines.
Okay, so let's recap what we've learned.
Okay.
We've got these positive trends in the Indian market.
Right.
The rupee's getting stronger.
Yeah.
And there are some company-specific events to watch. But the big question mark is the impact of these new Trump tariffs.
Absolutely.
They've already caused negative reactions globally.
Yeah.
And there's real concern about future economic growth and inflation.
It's a big deal.
It is.
And it really highlights how interconnected the global financial system is.
Yeah.
An announcement about trade policy in one country can have immediate effects on markets and economies everywhere.
Absolutely.
Even if local markets happen to be closed at the time.
That's right.
It'll be interesting to see what happens when trading resumes in India on April 1st.
Yeah.
Especially with that 24,200 level being cited as a key support level for the Nifty.
So as you're taking all of this in,
think about how these changes might affect your own financial decisions.
Right.
Or even just your understanding of how the global economy works.
It's all connected.
It is. Are there specific sectors or industries that you think might be particularly vulnerable?
Good question.
And how might you need to adjust your own perspective or planning because of these developments?
Yeah.
This isn't just abstract economic news.
Right.
It's a complex web with potential consequences for everyone.
Absolutely. The global economy is interconnected.
Yeah.
And what happens in one part of the world can have very real impacts elsewhere.
That's right.
So taking the time to really think about those effects, that's essential for making informed decisions in today's world.
Absolutely. All right. That's it for our deep dive today.
Thanks for joining us.
We'll see you next time.
See you later.